Good Tuesday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Japan's TOPIX gains for a 13th straight day after the US-China tariff truce powered the Nasdaq 100 back to a bull market. Trump's trip, the US president heads to the Middle East for his first overseas visit since re-entering the White House. He says he may speak to China's Xi Jinping later this week. Plus, the US president says he could attend negotiations between Ukraine and Russia this week in Turkey. EU finance ministers meet today to weigh the costs of securing Europe's borders. So markets catching their breath after that surge that we saw across European and US equities yesterday on that China-US détente. On the tariff side, of course, European futures now pointing to modest losses of around 0.3% after gaining around 1.2% by the end of the close yesterday. The DAX ending up in record territory, the strongest gains we've seen coming through for the likes of Spain and Italy. Those markets ending up at the highest levels in about 15 years. The focus on the FTSE 100, the focus on the pound today as well, on inflation and wage data out at 7 a.m. UK time. FTSE 100 futures currently pointing lower by 0.5%. Stateside, S&P futures off by 0.4% after closing higher by 3.3% yesterday, again on that US-China tariff reduction. Nasdaq 100 futures, we've mentioned the fact that the Nasdaq 100 is back in a bull market. The gains of about 20% then since around April, currently pointing lower by around 0.5%. But certainly the tech stocks were part of the story yesterday, with those gains coming across this index of more than 4%. Cross asset, we focus on the 10-year and the twos. The action, of course, on the 2-year at the front end, that rate-sensitive part of the yield curve yesterday, with the sell-off that we saw on yields up around 12 basis points. Today, a little bit of stability coming through for the Treasury markets, just a move of 1 basis point lower on the 10-year, 4.45 right now. The pound again in focus on the data that's going to drop at 7 a.m. UK time, currently pointing higher by 0.2 versus a softer dollar at 1.31. Iron ore in focus, given the gains that we saw yesterday, again on the back of that negotiation, now down by 0.4% as the reality kicks in about still potentially slightly more moderated growth and demand for that core input into steel making and iron, of course. Gold currently up 0.5% after the sell-off yesterday at 3,252 for the yellow metal. Let's cross over to Asia. It's a bit of a mixed picture right now. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing it mostly positive in the region amid this optimism from markets cheering on the US-China trade truce, this idea that a key overhang has been removed, right? No escalation for now, at least on the tariff front, and certainly removing some of these concerns for companies, particularly the ones in China, because it prevents some of the cost overruns potentially. So this is what we're seeing in markets. Japan is really leading the charge today. The TOPIX potentially on its longest winning streak since 2009. The stocks that are doing well are the shippers, along with the banks. They are lifting the benchmark today. But aside from that, if you notice how the Hang Seng has really been the outlier, some of this is to do with the massive moves we saw yesterday, biggest jump since early March. So maybe this is not unexpected, a bit of that reversal. But keep in mind as well, there's been talk that these trade negotiations and the tariff reprieve might mean less chance of fresh stimulus from Chinese authorities. There's also the element of this rotation underway in Hong Kong markets because there is that massive listing from the Chinese EV battery maker CATL, and it could shape up to be the world's largest listing this year. So next week is when that massive presence in Hong Kong markets drops. Maybe there's some rotation to adjust for all of that. Now flip the board, perhaps the clearest sign of China's confidence when it comes to what we're seeing on this so-called tariff détente is in the PBOC's Yuan fix today. For the first time in more than a month, below the 720 level. And that's helping the renminbi to rally to the highest level since early November against the greenback, really. And we're also seeing gains among other Asia currencies, Tom.
OK, interesting, as you say, Japan taking the lead for now. We look ahead to that CATL listing then. That's going to be huge, isn't it, next week in Hong Kong. Avril Hong in Singapore with a check on the Yuan strength coming through as well, with an eye on that fixing. Thank you. Now, Chinese President Xi Jinping has vowed to deepen economic cooperation with Latin America and Caribbean nations as he seeks to position China as a better partner than the US. It comes as President Trump hailed what he describes as total reset with Beijing after weekend talks, of course, in Switzerland secured a temporary reprieve on tariffs for both sides. Speaking in Beijing, President Xi said there are no winners in a trade war.
There are no winners in tariff wars or trade wars. Bullying or hegemonism only leads to self-isolation.
Meanwhile, Trump says he's likely to speak with China's leader later this week.
The talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week.
Well, Bloomberg's chief North Asia correspondent Stephen Engel joins me now for the latest. Steve, what is your assessment, what is the assessment of where China stands on the back of this reduction in tariffs, how well or not they came out of these discussions and what to watch for next?
I think they came out very well. Obviously, they basically went into the weekend with extreme suspicion and low expectations. And I think they came out of the weekend pleasantly surprised. They didn't really have to give a lot of concessions. Yes, they've pledged to, according to Donald Trump, remove some non-trade barriers and some market access, give market access and unwind their myriad, of course, of regulation and export controls. And basically, you know, open up the Chinese economy, which the United States has talked about, but they didn't specifically name what those barriers that they might remove are. But at the same time, as of tomorrow, we're going to see both countries, China and the United States, reduce their tariffs that are in place right now by 115% each, as you can see on your screen. And that is a very good thing for the exporters in China, no doubt. Many of them, whether it's Yiwu, the Christmas town in coastal China, which makes so many of the products for Christmas. And keep in mind, this is May is the big shopping month for American importers to the United States of Chinese goods for the Christmas time. I'm not saying that this truce saved Christmas, but it certainly removed some doubt about whether there would be empty shelves in the United States come December. So again, China is looking like it got what it wanted. It got the reduction of the tariffs, which it wanted. It got a point person named, that's Scott Bessent, whom they can directly talk with. He Lifeng and Scott Bessent now have a mechanism in place for future talks. And they got the mutual respect. Even He Lifeng yesterday said he was impressed by the professionalism of the U.S. delegation. So we've de-escalated the tariffs, we've de-escalated the friction and the bad blood, while escalating the possibility that we can move forward with trade and not see it grind to a halt.
Steve, just briefly, look, you understand very well the complexities of hammering out a more comprehensive deal between Beijing and Washington. As we look ahead to that 90-day deadline, then, what happens if there's still a stalemate? What are the expectations about how the two sides progress? Well, that is a big possibility that we could not get the kind of progress that Donald Trump wants to see over the next 90 days. And that Scott Bessent talked about the ceiling, though, might be about 34%. So that would be essentially that reciprocal tariff of April 2nd put back in place. And he also sees 10% perhaps as the floor. I want to read you very quickly what I got an email from Jefferies. This is analyst Edison Lee. He says, China or the U.S. was more desperate than China to deliver this de-escalation message. It's hard to imagine Trump would risk tariff-driven MAGA plan being seen as a failure. So pricing in a permanent de-escalation is risky because sectorial tariffs will still come. So we're not out of the woods yet, obviously. OK, Bloomberg's chief North Asia correspondent Stephen Engel ending on that note of caution. Thank you for that update. The Nasdaq 100, meanwhile, ties into, of course, what Steve was discussing, entering that bull market after the US-China trade truce. Let's bring in Bloomberg M Live strategist Mark Cranfield. Mark, the powerful rally yesterday then, are investors right to be leaning into this, or is that caution around how things progress from here something that those within the market should be thinking about now?
We're probably going to see continued optimism from investors. What's changed so much, as Stephen was saying earlier there, is really the narrative. Investors got used to the fact that in early April, it was just bad news piling on one another, tit-for-tat negativity between the US and China and other nations, and there seemed to be an endless spiral where everything was going into a big hole. That's completely reversing. The sound bites that we've been having over the past couple of weeks coming to a fruition in this Geneva talks in the past weekend have gradually been getting better and better. More towards the sign we want to do something, we want to put the past behind us, we want to do deals. That's music to the ears, especially of equity investors. That's what they wanted to hear so they can have a clearer picture of what lies ahead in the second half of the year, particularly after so many companies, especially big American companies, were giving very shaded outlooks for how they saw the performance coming in the second, third and fourth quarters of the year. That's beginning to look a lot better. If you want to go for one single barometer of why people will be looking more confidently ahead, it's as Avril Hong said earlier, the Chinese yuan. The central bank in China has been managing it very, very carefully. They've been using it as a potential lever in case they need to for trade talks. The fact that they're coming back, they're allowing the yuan to get a bit stronger, is a clear sign that the Chinese authorities do see a clearer path ahead. They're getting more confident that the worst may be behind them, and that strength in the yuan will feed into other Asian currencies and other emerging market currencies around the world, which again is a positive feedback loop for equity markets as well. So watch the yuan. If that continues to stay strong, that's a very good sign that investors do believe that there's better days ahead.
OK, the yuan as the barometer, particularly for that region. Bloomberg M Live strategist Mark Cranfield, thank you for breaking down the market moves and what to be thinking about in the days ahead as some of that confidence starts to filter through on what is happening between the US and China. Talking of which, a redhead crossing the terminal right now. Breaking news, China removing its ban on Boeing deliveries after that US trade truce over the weekend. You'll remember that there has been a ban in place for about a month to Chinese carriers taking delivery of Boeing planes. You had, in fact, some examples of aeroplanes literally turning around in the air as China initiated that ban. That ban has now, according to Bloomberg reporting, been removed. So a significant improvement in terms of the prospects for Boeing in that market, of course. China removing the ban on Boeing deliveries after those trade talks in Switzerland over the weekend. Donald Trump, meanwhile, is on his way to the Middle East, the first international trip of his second term, with the president due to land later this morning in Saudi Arabia. Let's go to Horizon's Middle East and Africa anchor, Jumana Pasechi, who joins us from the Saudi capital, Riyadh. Jumana, what is on Trump's agenda in the region?
Yeah, Tom, so it's around 8:15 local time here. It's expected that President Trump's plane is going to be landing in about 90 minutes time. So we'll pay close attention to that arrival, but also because he will be greeted by the Crown Prince Mohammed bin Salman. And I think the initial greeting is going to be closely looked upon, not least to draw comparisons with, you may recall, that somewhat awkward fist bump that President Biden had with MBS back in 2022. And of course, MBS and President Trump have enjoyed a close relationship. They have a good affinity, a solid affinity to one another. You may recall as well that on Trump's last trip, there was a lot of pomp and pageantry in 2017, the sword dancing. And we may get a lot more of that as the day progresses. But in terms of his schedule, it's fully packed. He'll be meeting with the Crown Prince at the airport. They'll be making their way to the Royal Palace. Saudi-U.S. delegations will have a bilateral. After that, he'll be making his way to this Saudi-U.S. business forum that is being held in event parallel. Now that kicks off in about half an hour's time. There'll be some key U.S. Treasury officials attending, the likes of Scott Bessent, who's been a very busy man over the course of the last few days. He's now in Riyadh. He'll be speaking alongside the Saudi Finance Minister, Mohammed Jadaan. Later on in the day, we'll be hearing from Howard Lutnick, David Sachs, the crypto czar, Jensen Huang, NVIDIA CEO, and then later on Elon Musk as well. So some really noteworthy American industry leaders flying in for this event in parallel to some of the discussions that are happening on the Saudi side with the Saudi Energy Minister, Aramco CEO, and a Saudi Minister of Economy also there too. So, but that's not it. At around 5 p.m., President Trump is expected to attend the forum himself. He's going to walk around some booths, make a big speech. So it's around 5 p.m. local, 3 p.m. London that we could expect to hear some of these big headline deals, announcements. And we know that the numbers floating around are very large. In that phone call back in January when MBS and President Trump spoke, the Crown Prince pledged to invest $600 billion in the U.S. over the next 4 years. President Trump has said he'd like to see that number move upwards to north of $1 trillion. So we'll expect to hear a lot of headlines about what exactly those figures are, those commitments, in addition to potential deals on the AI front, on potential defense. There's a $100 billion deal that's being talked about between Saudi and the U.S., and potentially on critical minerals as well. So today the theme is a lot of meetings, bilaterals, of course this business summit, and deal making, as we've been talking about.
Yeah, one senses those headlines are going to be crossing thick and fast, aren't they? Bloomberg's Jurecka Pasechi on the ground for us to cover all of that news as well. Expected, of course, out of Riyadh. Jurecka, thank you. Meanwhile, President Trump says he may turn up in person to potential Ukraine-Russia peace talks in Turkey. We're going to have the latest on that front next. Plus, I'm going to be speaking exclusively to the CFO of Munich Re after the German reinsurance giant reports earnings later this hour. We'll calculate the cost of those LA wildfires for that business. Stay with us. This is Bloomberg. Welcome back. We are going to bring you now an interview with the EU's Commissioner for Research and Innovation, who has been speaking to Bloomberg's Oliver Crook. Let's take a listen to that interview.
What happens is there is chance for Europe because you know that finance have been stopped for research in health, in vaccination, for example, vaccines, in science linked with the climate change. Some social science perspective, so it's a big chance for Europe to attract some of the best researchers and scientists from United States to come and work with their colleagues here, Europeans. And that's why the European Research Council, these grants that we provide, it's an excellent chance for them to move here with their teams.
And do you get a sense that that process is a little bit underway? Are you hearing from people? Is there some kind of...
I have information from European universities that there is a big interest from their colleagues from the United States, and they are looking for how eventually they can relocate and move here.
The EU's Commissioner for Startups, Research and Innovation, speaking to Bloomberg's Oliver Crook. Now, some other stories making the news this Tuesday. Indian Prime Minister Narendra Modi says his government will not hesitate to use force to neutralise what he calls terrorist camps in Pakistan. In his first public comments after last week's strikes on Pakistan, Modi called the use of force against such targets, quote, a new normal. Tensions escalated last month after gunmen killed 26 civilians in Kashmir, leading to tit-for-tat military strikes. Hamas has released the last living American hostage held in Gaza. The freeing of 21-year-old Israeli soldier Aiden Alexander, who is a U.S. citizen, is seen as a step towards reaching a new ceasefire agreement. The U.S. engaged with Hamas despite Washington designating the Iran-backed group a terrorist organization. Israel appeared to have little say over the negotiations and was informed of the outcome by the U.S. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get you up to speed on some other stories making the news then. This Tuesday, US House Republicans have unveiled details of their long-awaited tax package. The draft bill includes many of President Trump's campaign pledges, including no taxes on tips and overtime pay. It also makes permanent the lower individual tax rates legislated in 2017. However, it does not include a tax hike on the wealthiest Americans, something Trump had pushed for as recently as last week. President Trump, meanwhile, says he spoke with Apple CEO Tim Cook just as the Wall Street Journal reported that Apple is considering hiking iPhone prices. Apple is reportedly exploring coupling price increases with new features and designs while avoiding the perception the hikes are tied to US tariffs. Meanwhile, Bloomberg has learned Apple is planning a new AI management mode aimed at prolonging iPhone battery life. The enhancement, due in a September software update, will analyze how a person uses their device and make adjustments to conserve energy. The move continues Apple's strategy of integrating AI into its core features. And SoftBank's plans to invest $100 billion in AI infrastructure in the US have slowed, with risks stemming from the trade war holding up financing talks. SoftBank and OpenAI unveiled the Stargate project in January with promises to begin investment immediately. But Bloomberg has learned that more than 3 months later, SoftBank has yet to develop a project financing template or begin detailed discussions with banks and asset managers. Now, US President Donald Trump says he could attend negotiations between Ukraine and Russia this week in Turkey. Take a listen.
I think you may have a good result out of the Thursday meeting in Turkey between Russia and Ukraine. And I believe the two leaders were going to be there. I was thinking about flying over. I don't know where I'm going to be on Thursday. I've got so many meetings. But I was thinking about actually flying over there. There's a possibility of it, I guess, if I think things can happen. But I would fly there if I thought it would be helpful.
Let's bring in Bloomberg's Oliver Crook in Brussels. Ollie, you have followed the machinations in terms of these attempted peace talks between Ukraine and Russia since the beginning. Where are we right now, and whether or not President Trump can move the needle?
Yeah, so listen, Tom, I mean, it was a really interesting weekend where we seem to have had this sort of agreement between the European leaders and Zelensky and Donald Trump. Apparently, they had him on the phone, basically taking this ultimatum to Vladimir Putin to demand a sort of 30-day ceasefire to begin to have the negotiations for peace. That would have taken place yesterday. And then Putin sort of rebutted with, no, you know what, let's have some high-level meetings in Turkey on Thursday, to which immediately Zelensky sort of upped the ante, called the bluff and said, listen, I will be in Turkey on Thursday. I am ready to talk. You know, you better show up and we can have these discussions. And that is sort of where the conversation ended. We have not yet heard from the Kremlin. We have not heard any response about whether or not Putin will engage on these talks. I think it is pretty hard to imagine a scenario in which Putin would show up in Turkey on Thursday. But of course, this is possible. Everything that now Zelensky is doing is trying to push Putin to a yes or a no, and the kind of no that would basically create new sanctions for the United States, which we have heard from Lindsey Graham. We saw a draft list of what these sanctions could look like. They're talking about basically banning third-party countries from buying Russian oil and gas and uranium, and if they fail to do so, imposing 500% tariffs on the goods that are sold from that third-party country to the United States. Now, this would be a completely new tack from what we've seen in terms of U.S. sanctions. This would be aimed at really severely restricting any kind of oil revenues that the Russians are fundamentally dependent on. But the problem is this really the no? Is this, if Vladimir Putin says, no, I'm not going to engage on these talks on Thursday, is this the no that would prompt that kind of reaction from the Trump administration? I don't know that we're there yet. And we should say that, listen, at the end of the day, anything is possible in these negotiations. But what we are seeing from Zelensky is very explicitly him trying to not be the obstacle to peace. Every time the Trump administration wants something, Zelensky shows up, says yes, no problem, and really trying to push trying to push Putin towards that no that would basically enact the Trump sort of fury to try to rebut against the sort of Russian position, and basically finally determining that Russia is the obstacle to peace.
Oliver Crook in Brussels. Thank you for that update. Coming up, investors cheer the US-China trade truce. We saw that, of course, with that strong market performance yesterday, with the Nasdaq 100 ending up around 4%. The S&P, of course, 500 closing higher by about 3.3%. We're going to speak to the RBC Wealth Management's Frédérique on what to expect now, how to position around the optimism that is now filtering through these markets on the trade story. Stay with us. This is Bloomberg. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Japan's TOPIX gains for a 13th straight day after the US-China tariff truce powered the Nasdaq 100 back to a bull market. Trump's trip, the US president heads to the Middle East for his first overseas visit since re-entering the White House. He says he may speak to China's Xi Jinping later this week. Plus, as EU finance ministers meet to weigh the cost of securing Europe's borders, President Trump says he's considering attending Ukraine-Russia talks in Turkey this week. Let's get back to the earnings story right now, because we have a beat coming through from Bayer, the chemicals company, of course, with a focus on the litigation story around the weed killer Roundup. So lines on that front will, of course, be interesting to investors. I'll just give you the top lines in terms of the numbers then. First quarter adjusted earnings beating the estimates. Sales in the first quarter coming in at 13.7 billion euros, just above the estimates of 13.5 billion. In terms of core earnings per share, also higher in the first quarter at 2.49 euros. The estimates had been for just over 2.3. I'm looking as well at a margin that's coming in above the estimates in the quarter of 29.7%, and Bayer is confirming its 2025 outlook. It now sees sales and adjusted earnings margin at the upper end of the range. So Bayer confirming its outlook for 2025 and seeing sales and earnings at the upper end when it comes to margins at the upper end of the range. We'll be listening out for executives in terms of more details around the timelines, of course, the next steps around that litigation story as well. To the reinsurer, Munich Re right now posting profits that halved in terms of the most recent quarter, 1.1 billion euros. They're taking the hit from the LA wildfires. That was expected in terms of a hit coming through. They still see full year profit of 6 billion euros. So they are maintaining their guidance, Munich Re, of full year profit in the year, 6 billion euros. There had been some questions as to whether or not they would be able to do that. First quarter profit coming in above estimates, 1.09 billion euros. The estimates had been for around 906 million euros. Earnings per share essentially in line with the estimates. But top line in the first quarter, profit coming in above the estimates, taking that hit, though, from those LA wired fires. We're going to be speaking to Munich Re's CFO, Christoph Jurecka, in about 10 minutes' time. So we'll get more details in terms of the top lines coming through and how that business is positioned for the quarters ahead. So stay tuned for that conversation. Let's get back to the broader markets then. After the solid gains that we saw yesterday, of course, that huge run-up for the Nasdaq 100 gaining 4% by the end of the close. The S&P closing high by around 3.3%. A bit of breather for the markets right now, taking stock of those gains that came through yesterday. European futures currently pointing a little lower by about 0.1%. You had the DAX hitting a fresh record, and you had Italian and Spanish stocks at 15-year highs by the end of the close. FTSE 100 futures currently down by 0.3%. S&P futures a little softer by 0.3 again after the gains of more than 3% yesterday. And Nasdaq 100 futures currently pointing lower by 92 points. Let's flip the board and have a look cross-asset. We're focused on the pound as we lead up in about 30 minutes' time to wage and earnings data out of the UK. 132 right now on the pound, up 0.2%. We have inflation data, of course, out of the US as well later today. Could show some of the tariff impact. 4.45 on the benchmark US 10-year. Iron ore under pressure by 0.7%, and gold higher by 0.6 so far in the session. Let's get to the broader picture on these markets then. How to think about positioning given the optimism that we're now seeing in terms of the relief that has filtered through on this tariff data. On to bring in Frédérique, the head of investment strategy at RBC Wealth Management. Frédérique, thank you for joining us. Do you lean into the gains that we saw yesterday across the equity markets? How convinced are you that this tariff détente between the two sides, US and China, will hold?
Look, we are hopeful that it will hold at least for a while, but we are mindful that the challenges are not over. Certainly, big relief rally yesterday as de-escalation was a lot stronger than even the best hopes. But you have to remember that the US economy still faces average effective tariffs of more than 13%. So that's a lot less than the 24% it faced last week, but it's a lot more than the tariffs that were in place at the beginning of the year of 2.4%. So there will be some impact on the US economy in particular, as the country has a trade war with all its trade partners. We expect sluggish growth in the US. We expect a slightly higher inflation that we would have expected earlier in the year. So really a muddled outlook. So we had positioned early in the year for volatility, and we think that this trade continues, this position continues to be valid.
Do you think the markets are underestimating the continued drag on growth, the continued upside on inflation, given where tariffs are, given the supply chain disruptions, even with the cooling of tensions between Beijing and Washington?
Well, if a rally such as that we had yesterday continues, we would say yes. So already we're seeing that markets are settling a little bit. Again, big relief yesterday because the very worst case scenario, which would have been really terrible for the economy, has been avoided, or it seems so. Negotiations seem to be going on relatively well. But certainly the outlook continues to be muddled going forward, in our view.
And you have maintained your neutral call on equities, Frédérique. What would you need to see? What would need to line up for you to turn more constructive broadly across equities?
So we would want certainly about these trade deals. The deal we saw with the UK last week, encouraging. However, it's not legally binding. So we will want to see clarity on tariffs, clarity certainly with China, clarity with the EU trade deal, and earnings in continuing, particularly in the US, continuing to be delivered. As you pointed out, there's still a lot of uncertainty in terms of the supply chains, in terms of the demand that the end products will face. How will US consumers react to slightly higher prices? How much manufacturer will absorb some of these price increases due to tariffs? So clarity on this would help. In the meantime, we would invest where we have very strong conviction. We will make good use of alternatives products to have maximum flexibility in investments.
Do US yields look attractive at this point, Frédérique?
So we expect the steepening of the yield curve to occur. It's a consensual trade, so we would wait for the spread between the 2-year and the 10-year to decrease a little bit before buying more into that position. But this is something that we are looking at. In these conditions, you have to be very agile and look at specific idiosyncratic opportunities.
What does all of this do you think, to the Europe trade? The DAX has still outperformed the S&P year to date. Does that story continue in this environment? How are you thinking about the way you allocate around European equities?
So again, we have a neutral position in Europe. We expect a trade deal to go through. It might take a little bit longer, given the animosity that the Trump administration has towards the region. However, we note that the tone has shifted over the last 10 days, perhaps a bit more conciliatory, and certainly with the successful negotiations with China, we're more hopeful that a trade deal will occur, and that would limit the headwind that the region has. Again, we have preferred for many years global leaders which happen to be listed in Europe for equities, and we're now looking also at companies which may benefit from the new fiscal impulse. So companies, select industrials, select banks, select materials companies which could benefit from the Germany and the rest of Europe really loosening their purse strings.
Okay. Frédérique Carrier, thank you very much indeed. Head of Investment Strategy at RBC Wealth Management, with that neutral view on equities, but finding opportunities still when it comes to the fiscal impulse of Europe. We appreciate your insights. Now, Bloomberg has learned that China is lifting a month-long ban on airlines taking delivery of Boeing planes. Talking of that détente when it comes to the US and China. It comes after the breakthrough, of course, in that US trade war, with both sides agreeing to slash tariffs. Bloomberg transport reporter Danny Lee joins us now with the latest. Danny, how significant is this then decision by Beijing?
Well, it just adds to further evidence on the trade front that there is a ratcheting down of these tensions, which dramatically, this U-turn on US and China tariffs that got scaled back yesterday in the announcement. And so with something like Boeing aircraft prevented from being delivered into China for at least a month now, this is very much a visible manifestation of a further easing in these relations, or an improvement in these relations. And so for Boeing, this is a real boost, because they had around 50 aircraft. They're worth multi-million-dollar jets that were going to be delivered into China. And so therefore, this will provide some immediate relief that Boeing can get these planes into China and the money for those. And so, this is a significant step, given the communications between the government, the officials, and the airlines, that they have now been given the green light to take delivery of them. The question is now literally how quickly they can take delivery of them. So it's a real improving sign on the trade front.
OK, I like the way you characterise that. The visual manifestation of the improvement, or at least the dialing back of those tensions between the two sides. Bloomberg transport reporter Danny Lee, thank you very much indeed on that decision then by Beijing to end that ban on Boeing aircraft. Now, some other stories making the news. UK pension fund managers have agreed to invest at least 5% of their assets at home as the government seeks to boost the economy. 17 large pension providers are signing up to the voluntary commitment. It will see them invest at least 10% of defined contribution default funds in private markets by the end of the decade. We're going to be speaking with the UK Chancellor of the Exchequer, Rachel Reeves, this morning for more on those pension plans. That exclusive interview at 8 a.m. London time. Bloomberg has learned that Spain's Sabadell has held informal talks with lender Jurecka about a possible combination as it seeks to fend off a hostile takeover by larger rival BBVA. Sabadell's Jurecka approach highlights how the bank is intensifying its efforts to avoid being bought by BBVA. The bid is now closing in on the regulatory approvals it needs to be submitted to Sabadell's shareholders. Coming up, Munich Re's first quarter profit slumps by almost half as losses from the LA wildfires weigh on earnings. I will speak exclusively to the CFO, Christoph Jurecka. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Munich Re's first quarter profit has slumped by almost half as losses from the LA wildfires weigh on the German reinsurer's earnings. I'm joined now by Christoph Jurecka, CFO of Munich Re, for an exclusive conversation. Christoph, of course, the hit from those LA wildfires was expected by the markets, but what wasn't necessarily expected by a number of analysts was that you would reaffirm your guidance around net income, around profit for 2025, €6 billion. What gives you the confidence you can hit that target?
Well, good morning. First of all, thanks for having me. Great pleasure to be here. Well, yes, indeed. The first quarter was a bit more volatile than what the first quarter would generally be. But then at the same time, it's just one quarter, and the result is still within a range of normal fluctuation, what you can expect in a single quarter from a big reinsurer like we are. So we're very confident that the other quarters will then maybe basically show higher earnings, and then we'll be back at 6 billion at the end of the year. So in that regard, it's early and there's still 3 quarters to go.
What will be the key drivers, do you think, in the quarters ahead to hit that target?
Well, first of all, large loss volatility is something which is very natural in our case. The first quarter was heavily affected by the wildfires in Los Angeles, but obviously this is not an event which will repeat every quarter from now on. And therefore, there is, of course, plenty of upside possible in that range of major losses. On top of that, we saw quite some volatility, as you all know, in the capital markets in the first quarter. This can go either way, but we saw a lot of also positive movements recently, and until the end of the year, there's again a lot of time. That could also go in our way. On top of that, we already know that when we announced the acquisition, we communicated that already we acquired a carrier in the United States called Next Insurance. Once we book that for the first time, so after the closing of the transactions, there will be a positive earnings impact from that. So that were just 3 examples where earnings could go our way in the remainder of the year, and therefore we continue to be very confident to achieve the 6 billion target.
You had seen a €1.2 billion impact from those LA wildfires. You've now revised that down a little to €1.1 billion. Is that where that number stays, or is there potential upside or downside to that number in the weeks and months ahead?
Well, you know, in our business, we'll finally only know once we have settled all the claims. But if you ask me, traditionally we are quite cautious in setting up these estimates. Usually we tend to be at the higher end when we come up with our first estimate. Now we had to revise it slightly downward already due to FX movements. The US dollar helped us in that case. And then also we reflected retrocession. So the protection we get from reinsurance, which we buy, we also included that. And now we're at 1.1 billion. But who knows? We'll see.
What are you expecting from hurricane season?
Yeah, the hurricane season, I mean, there are always these projections into the future. If we would ask our scientists, they would tell me, the sea surface temperature is still quite high. Then with the El Nino, La Nina situation, it also seems to be the case that we are going into a more active season. If I combine all these facts, we would expect the season to be slightly above average, with maybe 3 ± 2 major hurricanes for the upcoming seasons. But we always have to interpret these messages with a lot of caution, given that these predictions are quite volatile as well. So in 3 ± 2, the range is quite wide.
Yeah, sure. Look, on pricing, there was some softness coming through from the April pricing numbers. What are you projecting around pricing in the quarters ahead? How does that story evolve?
Yeah, first of all, with the 1/4 renewal, we were happy to expand our volume by 6%. Prices declined, and in particular in areas where there were no significant loss activity and where prices came from a particularly high level, which means that the market is still in attractive territory also after 1/4. Now, the 1/6, 1/7 situation is a different one because those renewals will be much more US-centered. And in the United States, we had the LA wildfires. So therefore, I think it's still open if we see a similar movement there. And it will be very interesting to see how the market reacts, also incorporating the losses of LA wildfire in setting the reinsurance price now in the next upcoming renewals.
And it's interesting you touch on the FX impact as well, helping to lower that impact of the LA wildfires to 1.1 billion euros as a result of dollar weakness. How are you and the team thinking about factoring in this changing FX landscape in the quarters ahead? Are there changes you're implementing specifically to adjust to some of those significant changes, particularly when it comes to the dollar? Some of that was reversed yesterday, of course. How are you thinking about FX going forward?
Yeah, FX is really one thing we have to think about all the time because we are doing business globally and we have 31 major currencies we have to think about regularly. And so the only thing you can do is basically hedge your exposure to be not too much exposed to currency movements. But then here and there, we allow ourselves to take a position once we have a high level of trust, a high level of belief that a certain movement will happen. Then we can take positions always in line with our risk budgets. And in a way, FX is like an asset class for us. We invest into FX, take positions sometimes, but not always. And the general starting point is a hedged position.
What do you think? What is the long-term potential of the US market for you now, given that acquisition?
Well, the US is and always has been one of our core and key markets. Already in reinsurance for a long time, in specialty insurance for a long time. With this acquisition of Next Insurance, we open a completely new customer segment to us and expand our footprint in the United States. And this business segment are the small enterprises, the small commercial business. And in that space, it didn't happen so much so far. And therefore, we are very happy that we were able to do this acquisition and are now even expanding, enhancing our footprint in the United States.
On the asset management side of the business, Christoph, there's obviously been a lot of consolidation in the space. Are you looking for a partner when it comes to asset management?
Asset management, we're very happy with our setup. We have our own asset manager, a very professional asset manager called MEAG. MEAG is doing the majority of our investments, not all of them. And in areas where we don't have the expertise in-house, we outsource to external asset managers already today. And thereby we combine both. We combine the strength of our internal people and add selective skills where we don't have them in-house. So we think we are in a very good position with that strategy.
OK, Dr. Christoph Jurecka, CFO of German reinsurer Munich Re, on those results. Thank you for your time. There's plenty more coming up. Stay with us. This is Bloomberg.
Trade policies are evolving and are likely to continue shifting, even as recently as this morning. Still, they appear likely to generate significant economic effects, even if tariffs stay close to the currently announced levels.
Federal Reserve Governor Adriana Kugler speaking there. And of course, what we've seen in the equity markets yesterday was pretty astounding in terms of the upside. You are now in a bull market for the Nasdaq 100. You've come up 20% since April. And of course, the announcements around Liberation Day of those tariffs. You're not back to record territory quite yet, but the gains, of course, have been pronounced in terms of the run up for those tech stocks. We'll see, of course, if that can continue, given the concerns that people like Kugler have flagged around the still softer picture when it comes to the economy and the higher inflation story. Talking of inflation, let's flip the board and have a look at the previews around CPI dropping later today. The first time, according to Bloomberg Economics, that we're going to get a real feel of the tariff impact on the inflation story. Month on month, you're looking at an increase of 0.3%. That's after it contracted in March. We're looking at the April numbers, of course, to cross later today. Top line, year on year, you're looking at an increase of 2.4% in line with the previous month. How this all ties into the thinking, of course, of the Fed. Markets have paired their expectations, not fully priced the next cut until September. 2 cuts now priced in by the end of this year, given the, at least on the edges, some of the resolution around that trade tension between the US and China. So inflation dropping later today with that tariff impact. Let's flip the board and have a look at data that drops much quicker and much more immediately, which is in the next couple of minutes on wages around the UK. There's the focus on the private sector wage gauge. It could move down to around 5.7% from 5.9%. But again, Bloomberg Economics pointing that out, that is still far higher than is consistent with that 2% target for the Bank of England. Again, markets adjusting in terms of what they expect from the BOE. 2 cuts priced in fully so far this year, but it has led to the overall inflation picture, higher wages being relatively sticky at around that 3.4% in terms of core, at least. So that data dropping in the next couple of minutes will be broken by the team on opening trade, of course. We're going to get the latest details on the UK's plans as well to unlock billions of pounds in investment in our exclusive interview with Chancellor Rachel Reeves. That's at 8 a.m. UK time. The opening trades is up next. This is Bloomberg.